Welcome back to the channel, folks. This is Jason, host of Fighting Words Financial. And today I wanted to talk to you about the Q4 and full year 2020 results, actually 2022 results for SoFi. And folks, I meant to get up early and sit on that conference call, but I didn't make it in time. And I had to listen to a recording of it. And I pulled the investor presentation for Q4 2022. And I wanted to go through that with you. So my opinion on SoFi really hasn't changed in many respects. SoFi is still simply a purely growth story here, and I believe that it has a bright future. I'm not going to make any price target predictions. That's something I just don't do on my channel. I don't see them as being very useful. I'm a long-term investor. Every stock that I own, my time horizon on that is essentially forever. I'd prefer not to sell it. Just wait till it gets to a huge amount in terms of its worth, and then start selling way out of the money covered calls on it to generate income off the portfolio. But that's basically what has paid for my lifestyle over the last 6 years or so since I stopped working full time. So let me go through this with you guys, and we'll talk about some of the very, very positive results. This was a really positive quarter, and the trend is set here, folks. This is a growth company in the face of a lot of macro headwinds. And if the macro environment turns around the other way, I think we're going to see really explosive growth. So I did listen to some of the recording of the Q4 and full year 2022 conference call. And there were some very interesting things that were said on that conference call. Some of them that I'm not really clear they mean what I think they mean, meaning that maybe I'm hearing what I want to hear. So I'm going to go back and listen to that conference call again just to make sure that I'm really hearing that. But I did want to say that this is a growth story, so much so, and their financials are improving so much so that they will likely be profitable in 2024, even without a large turnaround in the student loan business. And there is looking like there is going to be a large turnaround in the student loan business. So 2023 is probably going to look really good for SoFi. 2024, I think, is going to look excellent. And that excellence is not necessarily going to be carried by the lending environment. It's really going to be financial services and the technology platform. And let's talk about that. Okay, so 2022 year in review, SoFi added a bunch of financial services, and they didn't really talk about their technology platform that much, other than to say that they acquired Technysis, which is a digital cloud-based core banking platform. So in January, they got regulatory approval to become a national bank. We all know that. They launched some new marketing campaigns. And in February, they introduced margin trading, which is something that's really good for revenues in terms of financial services, as margin interest is generally fairly high and interest rates have only gone up since they introduced margin trading. They offered a bunch of other financial services like same-day ACH transfers, credit card offers, credit score monitoring. They added after-hours trading and a bunch of ETFs, which of course they collect a management fee off of that. And they offer now options trading, which began to be rolled out in November, really got kind of a wider rollout in December. And guys, that's a big deal too in terms of revenue for financial services. Younger members tend to trade a lot in terms of options. Now, one of the criticisms on my last video that came through the comments, and these were well thought out comments, but to a degree, they kind of missed the point here when it comes to SoFi's membership. One of the comments was like something like, SoFi is targeting younger people and younger people don't have money. In case of SoFi, that is absolutely untrue. When you look at the demographics of the average borrower from SoFi, the average household income for a SoFi borrower is $160,000 per year. Now, I worked in banking and finance for a very long time, a distressingly long time. It reminds me of how old I am. But it reminds me of the old 80-20 rule, which is true for a lot of industries, that especially in banking, you get 80% of your revenue from 20% of your highest income earning clients, right? Or your highest net worth clients. SoFi has done a really good job of targeting those high net worth, not well-served clients, and they are going to produce the vast majority of revenue for their company. It's the total opposite approach of something like a Cash App, where they really targeted with the Cash App the unbanked. There are about 30 to 40 million people in the United States that don't have bank accounts at all. If you look at a heat map of Cash App adoption versus the unbanked, it's kind of an exact overlay. And that's great. You can still make a lot of money off of people that are unbanked if you have a lot of accounts, and they do. Cash App has grown and grown and grown, but now we see their growth slowing precipitously. in terms of their new membership growth, and they're really focused on generating more income out of these people. And the advantage that Cash App has is a really low cost of customer acquisition, but the money they earn per client is minuscule when compared to SoFi. And another app that's going to compare favorably in this respect is going to be MoneyLion. The cash generated per member is a lot higher for SoFi than it is for MoneyLion, Cash App, or a number of other different apps out there. So the consolidated financial highlight here, the big one, of course, is net revenue, GAAP revenue, which is up 60% over the year. We're going to skip down to some nice graphics here so we can all take a look at that. So SoFi added 480,000 new members in Q4, bringing the total number to 5.2 million. That's an improvement over the prior quarter, and that's a 51% growth year over year in terms of members. I think that's absolutely amazing. And let's remember, most of these members are people that are high income earners. Year over year growth is, of course, slowing as the platform grows a little bit larger. And we can expect that at some point, new member growth is going to stay in that 20 to 25% range in the future. But let's hope that's a few years off. In terms of products, SoFi added 695,000 new products in Q4, bringing the total to 7.9 million, which is a 53% year over year gain. Let's remember that part of bringing new members in is getting them on the product recommendation flywheel. And that is something that SoFi has demonstrated that they can successfully do, and they maintain relatively good product growth over time. So when we look at Galileo accounts, and this is one of the things that I'm really interested in, we still see Galileo making quarter over quarter gains here. It's not the exponential growth, of course, that we'd hope for, but it's growth. And these are pretty sticky relationships with Galileo. These are accounts that really form. Our Galileo is a technology backbone for a lot of different fintech companies. They have about 131 million different accounts. And if you saw my video previously on that, I have a lot of interest in how well this is going to do. And I think that in 5, maybe a little bit more years, Galileo and Technysis technology platform through SoFi is probably going to be generating just as much money, if not more, than banking and financial services, right? Largely because their potential client base is really, really large in this respect. Fintech has gotten to the point where no one wants to reinvent the wheel anymore in order to maintain a full technology stack, when you can simply buy the pieces and assemble them in the ways that you want to. And when we take a look at who's using Galileo's technology stack, you're looking at pretty good companies like Toast. And Toast is a company that I work with, which is the point of sale and restaurant management software that I use for my restaurant and bar. And it's not just me. They're really kind of taking over the industry. And I'm actually working on a video on that right now, where I've gone out and I've talked to a bunch of restaurant owners who use Toast and other software. And this is a Galileo client as well. MoneyLion is also a SoFi and Galileo client. SoFi, of course, is a Galileo client. So this technology backbone is growing. Growth has slowed a little bit here through Q4, which is not a great sign. But I do believe that's going to pick up a little bit more. Largely when the venture capital environment improves a little bit for fintechs. That's what I think is kind of the issue right now, is that some of the funding for new fintechs just isn't around. When it does come around, Galileo is really going to have a first mover advantage when it comes to this technology backbone. And there's going to be a lot of pressure for these folks to adopt some of this technology that Galileo and Technysis offer, rather than reinventing the wheel, so you can have quicker time to market in terms of your fintech ideas. Like, I don't know how many people who are SoFi investors even realized that Toast was a client of Galileo. At Toast, it may have anywhere between 6 and 15% share of restaurant management software. So the numbers on that are really kind of crazy. So we don't really know who has the largest share of point of sale systems and restaurant management systems in restaurants. The data is not very good. So that's something I'm researching as well. So with lending and financial products, lending products were up 24% year over year, which, considering the macro headwinds in the economy and particularly rising interest rates, I think that's absolutely amazing. Financial services up 60% year over year, kind of what I expected, kind of what was predicted here. So new lending products ended up being about 1.3 million for SoFi for the year, and for financial products that ended up being about 6.6 million, representing 24% growth in lending and 60% growth in financial services. The financial services productivity loop, once again, and this is a graph that's produced every quarter. Last quarter, that number for total financial service products to lending products was 4.6 to 1. In this case, it's 4.9 to 1. Financial services really hasn't scaled to the point where it's a profitable sector, and it is the leading losing sector for the company right now. But they have to scale pretty large before they're really profitable in that respect. And there's always going to be some things inside of financial services that'll end up being dead weight and that are just losers forever. SoFi at some point may elect to have a third party manage those or actually divest those from the company, but they're probably not going to do that for a number of years. They're just not at that stage right now. So when we look at quarterly performance here, quarterly performance of 4.43 million over, and this represents 58% growth over last year, with record adjusted earnings before interest, taxes, depreciation, amortization of 70 million, which is 14 times year over year growth. So there was something very interesting said about the profitability of SoFi on that conference call that I don't necessarily want to repeat at this point because I want to make sure that I understood it properly. But he was basically saying that net margin for the company is going to be very, very high for a financial services company here by the end of 2023. And that number to me sounded kind of ridiculous. And we're talking about Anthony Noto saying this. I'm going to review what he said and look at what he means by that before I kind of repeat that. But it's very, very good news, folks. So when we look at growth here, we're looking at really exponential growth here in terms of profitability, meaning this company is inching closer and closer and closer to profitability while we're seeing really good growth in adjusted net revenue. When we look at annual performance in terms of revenue, with revenue coming in right at about 1.54 billion, that is more than the original guidance that was given out in the beginning of 2021 or 2022 rather. And that is more than the adjusted guidance given out in Q2 of 2022 when they were surprised by the extension of the student loan moratorium. Now, I do not expect the student loan moratorium to be extended anymore beyond June 30th, largely for political reasons, of course. And we're looking at really good improvement numbers here in profitability metrics as well. So I think this was a really amazing year in terms of annual performance, particularly considering all of the headwinds that they were facing. I mean, this was basically, SoFi was basically a canoe paddling upstream all year long, and they still met all of their goals. So a little bit of things that are concerning those, like I said, the slowing growth metrics for a lot of the things that they're doing right now. How much of that is due to natural slowing of growth as the platform goes larger? How much of that is due to a challenging macro environment? And how much of it possibly due to the fact that they're running out of customers in their target demographic? I don't know that they're running out of customers in their target demographic, guys. This is just something that I'm wondering right now that I want to take in concern. But when I started comparing SoFi's growth in terms of revenues, in terms of products, in terms of increases in potential profitability, in terms of membership growth, they're pretty far ahead of most other major fintechs, but their revenues, of course, are much smaller. I think that Square is going to end up somewhere around $17.7 billion this year in revenue. They report probably like on February 20th. And at 1.5 billion revenues right here for SoFi, they're less than 1/10 of the scale of Cash App at this point. They have a lot of room to grow. And Cash App to a degree, and Square and Block by itself to a degree have grown really as a sort of cool factor as well. Like it's just been simply cool to adapt Cash App for a lot of people. In fact, I hear the sort of Cash App Venmo wars going on among some of my friends where one group prefers one app, one group prefers the other. I have converted a few people to SoFi Cash though. So we'll be talking about that in the future. So when we look at the variance between guidance here, it looks like that SoFi came in at about $18 million more than guidance, which that's not blowing it out of the park in terms of guidance, but it is a beat. When we look at adjusted net revenue growth, we look at the Q1 2023 low for guidance here of about 430 million to about 440 million, and this is for Q1 of 2023. We'll be taking a look at that, of course, in a couple of months. But that is actually, the guidance is a little bit lower than the guidance from the previous month. So I will be very interested to see how that's going to work. So this is pretty ambitious. For full year 2023, non-GAAP guidance, SoFi expects to deliver between 1.925 and 2 billion in adjusted net revenue and 260 to 280 million in adjusted EBITDA at 30% incremental EBITDA margin. This is basically them predicting about a 30% gain in their business over the year. And this assumes, positive quarterly GAAP net income in Q4 of 2023, and a 20% incremental GAAP net income margin for the full year. That was something that he said out loud on the live stream that I didn't want to repeat, but it's actually here in the Q4 here. That just doesn't really seem possible. I need to see how that number was derived. But that would actually be a really, really good thing. And that would mean that actual real GAAP profitability probably wouldn't be far behind that, probably just 2 or 3 quarters behind that. So sometime in 2024. Honestly, that may be the most important thing that SoFi has ever put in print about their financials. 20% incremental GAAP net income margin for the full year. So they're basically expecting profitability sometime in 2024. That is barring, of course, any new costly acquisitions that don't involve like a stock-only transaction like they did with Technysis. So I'm very interested to see the reaction from other YouTubers on how that statement went over, but I think it's extremely, extremely important. All right. So that is my very quick review of SoFi's Q4 2022 earnings. I hope you enjoyed that. If you did like that, please don't forget to like and subscribe. And I will see you guys next time. I'll have my video out on Toast here probably later on in the week, and how Toast ties back into the Galileo Technysis Galileo Technysis ecosystem. And I look forward to hearing you guys comment on this video and the next one. Thank you very much, guys. And I will see you next time.